Hello everyone, this is Tom Fox and I'd like to welcome you to the Daily Compliance News. The Daily Compliance News is an offering of the Compliance Podcast Network. October 18, 2019, the Will CITGO Lose Its Sign edition. First up, from the Wall Street Journal, FASB delays implementation of accounting standards for some companies. The Financial Accounting Standards Board, or FASB, has extended the implementation deadline for several accounting standards, giving more U.S. companies time to prepare. The accounting standards setter on Wednesday approved its proposals for companies, mostly private businesses and nonprofits, that haven't yet had to implement new rules on lease and hedge accounting. FASB also extended implementation deadlines for a standard that requires lenders to record expected future losses on as soon as loans are issued, and one requiring insurers to revise how they value long-term contracts. All of these proposals, or rather none were controversial, but several were difficult for companies to implement. So this is no doubt a welcome development. Next up, from Bloomberg, the story of the Swiss trader Gunvor paying $95 million to Swiss authorities in a corruption probe. They will pay this in a long-running investigation by Switzerland's Attorney General after the energy trader admitted a former employee bribed officials in the Republic of Congo to secure contracts. Gunvor failed to take all reasonable organizational measures required to prevent bribery. The company, one of the world's largest independent oil traders, will pay a fine of about 4 million Swiss francs and give up related profits of about 90 million Swiss francs from the transactions which were as a result of bribery and corruption. So good to see the Swiss officials directly coming in and fining and penalizing Swiss companies around bribery and corruption. Next up, the long-awaited Saudi Aramco IPO has been delayed yet again. As Saudi Aramco postponed the launch of its IPO, once again, another setback for what would be the world's largest ever stock listing. The state oil giant had been preparing to give the go-ahead to proceed with the share sale on October 20, but now it's delaying it until December or January. Of course, this is not on the London or New York Stock Exchange, but it was on the the Riyadh Stock Exchange. It was a last-minute decision, as a few things, quote, needed to be fine-tuned, including financial figures for the third quarter, end quote. Aramco executives now want to issue a prospectus and then market the IPO. After getting the third quarter figures on production, revenue, and profits, they believe this will be the better to sell the IPO to the Saudi investor community. And finally, our lead story today is on CITGO. The iconic refining company, who's actually their emblem, is iconically above Fenway Park. It's long been a mainstay of American oil industry. They've got 4,500 refineries and about 3,000 employees in Texas. They're running a big risk, though, as Venezuela owes a $913 million payment on October 28th on its 2020 bonds. If it doesn't make these payments, the creditors could try to seize CITGO. CITGO is the only real asset left by Venezuela that's subject to being seized because it's obviously a U.S.-based company. There is a separate competing board of reformers who want CITGO to divorce itself from its corporate owner, PDVSA. It's also in the middle of several FCPA investigations around bribery and corruption involving PDVSA, where CITGO not only got dragged in, but unfortunately was an active participant in the bribery and corruption. So it's going to be interesting to see how this plays out and what will happen to the CITGO side. This is Tom Fox. I hope you have a great weekend from the Daily Compliance News.